Welcome back. I'm Pratap here. Today is 11th December 2024. In this video, I'm going to evaluate the performance of high liquidity zones generated in the previous report. Even before that, all of you please understand we are providing complete free training on supply demand zone price action. All the training lessons are available at our NeoStock YouTube channel. At our channel homepage, please click on the tab Posts. Some of you might be seeing the tab Community. Click on the tab. You get access to our free training course. Here you can see a YouTube playlist link that will be taking you to all the training lessons. You just click on the link. Now we are into the playlist Supply Demand Zone Price Action course. Here you have all the training lessons are available. You just need to scroll down to the bottom of the page. Here, starting from lesson 1.1, all the training lessons are placed in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this video description. Please join at our Telegram channel. It will be helpful to you. Now let's get into the analysis discussion. Yesterday, end of the day report, we identified 7 high liquidity zones from daily and 75 minutes time frame. The first one we are going to discuss, Laurus Labs. This is a daily high liquidity supply zone. We already discussed this zone in our yesterday's HLQ analysis video. Yesterday we discussed this zone is having a 5 minutes high liquidity zone, and that is supporting aggressive trade setup. Directly let's go to the 5 minutes. It is not a fine-tuned zone, but this is a 5 minutes aggressive trade setup, drop, base, drop. So what is the characteristics of the 5 minutes high liquidity zones? Whether they are fine-tuned zone or whether it is a aggressive trade setup, it is a high liquidity zone at 5 minutes level. Here you have the institutional order flows are there. So until the zone is violated, we can take as many as a trades possible. Whatever the opportunities we give, we will take trades. One day it will be violated, that day our trade will be stopped out. We have to accept that. Until before that, whatever the opportunities it has given, we need to enjoy those opportunities. See, yesterday it gave a trade. Even before that it gave another trade. Monday it gave a trade. Yesterday, Tuesday it gave a trade. Today, Wednesday, it gave another trade. Here. But today, have you noticed? This zone is pierced. But it is within our stop loss. See the blue color line? That is the stop buffer. And our price is within the stop buffer. Yesterday you have seen one of the stock slightly pierced the stop buffer, but still we exited the trade because the stop buffer has been violated. After that prices came. That was unlucky for us, but today is a lucky day. Why? Because the prices slightly pierced the zone, but prices are within the stop buffer. Thereafter, prices were moving down and finally reached the 15 minutes target zone. It looks like somewhere in between the prices reached again this zone, pierced zone, and again came down. But that is a different story. Maybe some of you might have exited the trade because prices are moving. Using 1 minute trailing stop loss you might have implemented and you might have exited. That is a different story. But our high liquidity zones performance point of view, from the trade we have taken till the 15 minute zone, either it should achieve minimum 1:3 RR or it should reach 15 minutes target zone, whichever the one we consider that as a successful trade. And what is the RR? It has 1:3.92 RR is there till the 15 minute zone. Maybe somewhere here 1:3 RR will be there. That itself is a success, but 15 minutes reaching the zone is a much better. So this is another successful trade. Okay, from this 5 minutes aggressive trade setup till here, how much profit it has given? Laurus Labs has given 8,330 rupees profit, which is 4.2% ROA as per one futures margin cost. Maybe it is if it is options, you may get more profit. But risk management is high in options compared to the futures. Okay, but now you can ask a question. Maybe tomorrow again, if the price reaches in this zone, can we take a trade? No, you cannot take. Because this 5-minute zone is no more valid because it is pierced. Once a zone is pierced, you cannot plan the trades. Pierced zone's purpose is different. They will be helping you in identifying some traps or LTF zone as a horizon to the HTF zone. Such kind of concepts will be useful with the help of pierced zones that you will be learning in the upcoming training lessons in the coming weeks. But we got again another successful trade from this zone, and now this zone is violated. Violated means pierced, so it is no more a valid zone for taking the next trades. So where we have taken trade in this candle. This is a morning 10:20 5-minute candle, and when it reached the target 12:35, almost 1 hour or 1 hour 15, the trade is completed. So this is about Laurus Labs at 11:20 to 12:35. And we also got one more trade in LTF, L&T Finance. This is also a 75 minutes high liquidity zone. This is the one identified by our software. Rally 1, 2, 3, 4 base candles and a drop candle. This is the 75 minutes high liquidity zone, and this zone is also tested several times, but recent price action, price came very close to the distal line. It didn't cross the distal. That's why it is still valid. Otherwise it could have been a pierced zone. Still this is a valid zone, but during this process, when prices are coming down, a new 15-minute zone is created here. You can consider this this is the leg-in. You have 2 base candles and a drop candle. This is the 15-minute zone. And within this 15-minute zone, we have drawn a fine-tuned 5-minute zone. So here you have a fine-tuned 5-minute zone. We have a rally, we have 1, 2, 3, 4, 5 base candles and a drop candle. And some rejections you are seeing from the zone each time prices are entering. That indicates a strong institutional order flow in this zone. And now prices entered into this zone after when the prices were started moving. After that, this is the first time prices entered today. Morning 10:35 minutes candle, it reached the fine-tuned zone, and after that again prices reached the target. So when you got the entry at morning 10:30 candle, 5 minutes candle, and when it reached the target at 12:40 candle. So almost 2 hours. The trade is on. And how much profit LTF has given? LTF has given 6,871 rupees profit, which is 4.1% ROA as per one futures margin cost. See here 8,000 we got 4.2, here 6,800 we got 4.1. Here the margin cost is less compared to this margin cost of one future. So that's why we got 4.1%, even though the value is less than this. But ROA is almost same, just only 0.1% difference. So this is about LTF. So this is 75 minutes HLQ zone trade. And then we got one more trade from Tata Steel. Tata Steel is a 75 minutes high liquidity demand zone. We have a rally base rally. And this is a today's candle. Yesterday also we got a trade from this zone. You may feel it is a tested zone. Yes, we will feel like that. First, how we fine-tune this zone. What is the technique behind in taking the trade even today also? That I will be explaining. So this is a 75 minute zone, rally base rally. This one is fine-tuned with 15 minutes time frame. We have two 15 minutes order flows. One is a drop base rally, and another one is a rally, 3 base candles, again rally candle. This is the dynamic view. Dynamic view, this is a failed ERC. If you look into the dynamic view, it is a rally candle, and finally prices closed here. Okay, this one again fine tuned with 5 minutes time frame. In the 5 minutes time frame, now you can see a drop candle, base candle, and a rally follow through candles. And this candle is overlapped. A part is outside the zone, another part is inside the zone. And here you have a drop, 1, 2, 3, 4, 5 base candles, rally. This is a 5 minute zone, and from this zone it picked up the orders. This 5 minute zone. Do you remember the concept? Lesson 26. You learned about price action in the leg out. Maybe it looks like a tested zone. Go to the 1 minute time frame. Whether you can see any clues? Yes. See here what happened. You have a drop, you have a base, you have a rally, and follow through candles. Drop, base, rally. The 1 minute zone is created again here. Earlier it looks like a tested zone. But the lesson you learned in lesson 26, the price action at the leg out candle, higher time frame leg out candle. But the moment higher time frame leg out candle created a feeling that this zone is tested. But if you look into the lower time frame, one lower time frame, that is from 5 minutes to 1 minute if you went, now clearly you can see a drop, base, rally. Of course, we take orders from this zone only. If risk management, if you want to apply, you can consider this as a rally, base, rally. Somewhere here you can keep your stop loss if you feel risk is high. Somewhere here you keep your order. But here drop, base, rally is created. Maybe within this area you can plan your trade. Or a type 3 proximal entry you can take from this zone, drop, base, rally. Here 1 minute level. But we have an order flow. So think from the 5 minutes, if the risk is within your accepted limit, definitely you plan. Here you can keep the stop loss a little below by adding some stop buffer. But definitely next time at least one test, this zone will work out. But actually it is looking like a tested zone. So here rally, base, rally is a tested zone accordingly. But if you apply the concepts you learned in lesson 26, this is the zone institutions are trying to cheat us. They created a feel this zone is tested. But actually they kept the new order flow, and next time again it will give one more test from us. But all the people who are not aware of our lesson 26 concept, they will simply ignore this zone. Why other people don't know about lesson 26 concept? Because it is a new concept I developed. People outside are not aware of lesson 26 concept. The price action at the leg out is a new concept I developed. Lesson 22, lower time frame zone as an horizon to the higher time. It is a new concept. Your price direction in lesson 13 is a new concept. The hidden zones and hidden bodies is a new concept. In a trend based on higher highs and higher lows, I developed equal high and equal low. It is a new concept. Many new concepts I developed. That's why those concepts working perfectly. Many people are not aware of that. It takes maybe a couple of times to reach to the public. Till then we will enjoy all the profits given by these new concepts. So this is a point you should observe about this zone. But what about here? Here interestingly I have seen a lot of price action here. I suspected there could be a 1 minute zone here. So I went to the 1 minute time frame. There I have seen a beautiful 1 minute zone acting as a high liquidity zone. See here again failed ERC candle as a rally candle. You have a base candle, rally candle. Prices tested, price moved, prices tested. Already 2 times it is tested. Yesterday it is tested 3rd time. Today it is tested 4th time. Today morning 9:15 candle, prices entered into the zone, picked up the orders, and then close it, and after that see the price movement till the 15 minutes target zone, and finally reached 15 minutes target zone at 10 o'clock 1 minute candle. Almost 1 hour 45 minutes you are in the trade. But only thing is, some of you who avoid trades in morning 9:15 candle might have missed this trade. Maybe it might not have. But anybody who placed orders, pre-market orders, or maybe the moment market starts in the morning 9:15, after that if you place your order and if it is getting executed, it is a successful trade for you. But high liquidity zones point of view, it is a successful trade because prices entered and it pushed the prices up to 15 minutes target zone. But whether you take the trade or you ignore the trade, it is up to us. I know many intraday traders who ignore morning 9:15 candle trades. They will be missing this trade. Some people after opening the market, they keep orders in the 9:15 after opening to avoid the gap up and gap downs. Many people after opening only they will keep. If any of your orders executed after you keep, because prices started from here, moved up, came down, after that it picked up the orders and moved up and closed. Probably end of 9:15 candle this price action would have been executed. Definitely who kept the orders once the market is started, 95% your trades would have been executed. And those who won't keep trades in 9:15 candle at all, probably you might have missed this trade. But okay, forget about whether we got the trade or not. But high liquidity zone performance, because these videos purpose is not about my trades or your trades. Several times I told you, these are all not my trades. These are all the opportunities given by the NeoStock software. That is what we are evaluating every day. How well our software is working. Because the outside world should know about our software. There are two purposes. Several times I told you this point. Even question and answers also addressed this point. I have two goals because of these high liquidity zones. Every time I am explaining, people are not listening earlier videos. People are not listening Q&A videos before you ask the questions. Even yesterday also one person asked, why you are publishing these videos, why you are not doing this analysis before that. Several times I told you, I am not providing you any recommendations. I am a software guy. My goal is to push my software. My goal is to let the world know about the performance of my software. For example, take TradingView. TradingView owners, are they giving you recommendations every day because you are using their software? Are they giving you any recommendations? No. They are just selling their software. My objective is also the same. But why I am doing this analysis high liquidity zones? Because the world should know about performance of the new concepts I developed. That's why until my software reach the public, I am promoting my software. That is what you should understand. Several times I told you, these high liquidity zone analysis is mainly to promote my software. And what is the second use? Second use is to help you learners, whoever is learning the subject, to help them. Because every day I am analyzing HLQ zone analysis, how perfectly we can fine tune the zones. People by listening these videos, they will be strengthening their skills. And sometimes some special scenarios we will see in the price actions. Those concepts I am explaining. And those concepts are useful for everybody. Everybody means who already learned the course, who are having 4 years, 5 years, 6 years experience in supply demand zone. For them also these HLQ zone analysis videos are helpful. Because at least in a week, 2 to 3 videos, we will be seeing some special scenarios. Those special scenarios are always explaining you some concepts that will help to gain your experience. So the main purpose of the high liquidity zone, second purpose of the high liquidity zone analysis is to help you people gain the experience from these discussions. See how nicely we fine-tuned this zone and identified this is a 1 minute high liquidity zone. Until this 1 minute high liquidity zone is violated, we can enjoy the profits whatever it is giving. We take a profit and it will move and we will exit. If we would not have identified this 1 minute high liquidity zone, definitely what we do, we consider this is a tested zone, 5 minute zone, and we will leave it. That's why when you are doing your analysis, you should think from all the directions. Opportunities won't come easily. You have to do some hard work. You have to do some smart work. Both you should apply. Hard work as well as smart work. Hard work you should apply at the time of learning the concepts. At the time of gaining your experience knowledge, you should apply hard work. Smart work, thinking in a different directions. You should not think in the same direction. I explained a concept. If you think in the same direction, you will never improve. I learned supply demand zone concepts. If I applied the concepts in the same way, today you might not have experienced these high liquidity zones concepts. You might not have experienced the lesson 20 to lower time frame zone as an horizon to the higher time frame concept. And just now we discussed the lesson 26 concept, a special price action in leg out candle. You might not have learned that concept. You might not have learned hidden zones concepts, hidden bodies concepts. If you miss all those concepts, where is the perfection? Because I am thinking in a different direction every time. I am developing new concepts that are giving better profits than the original traditional supply demand zone concepts. The theory whatever developed, the theory has to be changed. Because institutions will be observing this theory time to time. They know where exactly we place our orders. They want to trap our orders. That way the price action will be changing. When the price action changes, new concepts will be developed. That is what I am doing. That is how I am identifying new concepts. Is anyone teaching these new concepts? No. Only NeoStock is. Maybe tomorrow somebody, some other trainers, they may find our channel. From my videos they may learn. And they will continue add these new topics in their trainings. But they are charging money from you. I am teaching you with a free cost. Generally, what is the human psychology? When somebody is teaching much better than any other, but the training is free, we will be having some kind of, some kind of negative feeling. Oh, it is a free training. What he will teach? Nothing. Maybe I have to pay 1 lakh rupees so that he will teach excellent way. You go and pay 1 lakh and not even 50% of what the concepts you learn here, he will not be teaching. Finally, you will realize and you will be blaming that person, he cheated me. It's not he cheated you, your mindset, your way of thinking. That itself made yourself getting cheated by the other people. You should change your mindset. You should understand the reality. That's why always I tell, think in different directions so that you learn in a smart way. You also identify new things in your concepts. That is what everybody should do. So that's why I am telling you guys, we are the people. Being an Indian, I invented a new concept. We all should feel proud about that. But if some European person, some American person developed a new concept, and if you are saying great, excellent, super, what is that? When they are developing, why can't we develop? That is what I thought. That's why I was thinking in a different direction. Finally today I developed new concepts, many new concepts. But unfortunately public is not aware because YouTube slowly they are pushing the videos. It is not going in a fast way. And you people, most of the time, you will learn the concepts and you will leave. You won't tell to your friends, you won't tell to your relatives. Because of selfishness. Okay, only I should learn, others should not learn. I'm not talking everybody is like that. But at least 90% people are like that. But in trading, more and more people learn and more strength will be coming to that concept. Because a lot of order flows will be added so that there are less chances of getting failure. But stock market we do in a reverse way. That is very unfortunate. Anyway, how I identified this 1 minute zone, that is very important. Because of the price action I have seen at this zone, the first clue I got. Some price action happened in this area. That means lower time frame Lower time frame means the 1 minute time frame. Some price action will be there. Again from here it picked up the orders. Of course this is today's price action. But before today we should think about it. Already a test is there here multiple times. Definitely there could be a high liquidity zone should be there. That is the way I thought. Immediately I went and 1 minute time frame and I saw there is a 1 minute high liquidity zone. See today what is the characteristic of 1 minute high liquidity zones? Not only 1 minute, even 5 minutes high liquidity zones. 1 minute rarely we go. Most of the time we will limit ourselves to 5 minutes only. Something special if you see in 5 minutes, then we go to the 1 minute. The characteristics of high liquidity zone is enjoy the profits, whatever the profits you are getting. One day it will be violated. And the day when it is violated, the stop loss is just negligible. We should not consider. That's why you might have noticed in high liquidity zones, first test it is failed, then only I am considering the zone is violated. The second test, third test, fourth test, whenever it is violated, I am not considering that is a zone violation. I am not considering that is a stop loss. The reason is earlier test gave good profits to us. That is the way we should consider. So anyway, it gave excellent profit today. What is the profit Tata Steel has given? It has given 10,450 rupees profit, which is 6.6% ROI. So let me, maybe I have to write a better text here. This is our trade is 1 min high liquidity demand zone. What kind of 1 minute? This is a fine-tuned 1 minute, not normal 1 minute. If it is normal 1 minute, it could have been an aggressive trade. This is not aggressive trade. This is a fine-tuned. That fine-tuned zone is a high liquidity zone. The fine-tuned 1 minute HLQ demand zone inside 75 minutes high liquidity zone. That's it. How we find this? Generally we limit ourselves to 5 minutes. But how we find? Because I saw a lot of price action in these candles. Immediately that alerted. What way? Let us go to 1 minute and see. Immediately I was able to find this 1 minute zone. And today also exactly from there. See the sharp rejection. Until it is violated, we can enjoy all the profits. Okay, this is about Tata Steel. These are the 3 trades we got, and the other stocks we did not get is Tata Power. Tata Power is a daily high liquidity supply zone. Here we have drop, 2 base candles. This is what our software identified. So how I fine tuned? Go to the 75 minutes time frame. Here I identified drop, 3 base candles and a drop candle. This is the 75 minute zone. Here I could have drawn rally base drop, but I am not convinced with this zone. This is not looking like a base candle. It is a ERC candle. That's why I didn't. But still I have drawn aggressive trade setup here because of some price action clues. Let me show you in the next time frame. So I haven't drawn any 15 minute zone, 75 minute zone here. And let me go to the 15 minutes time frame. In the 15 minutes time frame, see here I have drawn a 15 minute zone, drop, base, drop. See prices came near to the zone and coming down. Again near to the zone and coming down. That means there could be some strong order flow in this area. So that means we can plan an aggressive trade, drop, base, drop, but this is 15 minute zone. Because it is 15, you should fine tune to 5 minute zone. That's why I fine tuned even 5 minutes. Before we get into the 5 minutes, let us look for the 15 minute zone in this fine tuned 15 minute zone. This is the 75 minute zone, right? Inside 75 minute zone, again we have drop, 3 base candles and a drop candle. This entire thing is a 15 minute zone. And within the 15 minute zone, I fine tuned with 5 minutes time frame. See the first one. Here we have a rally based drop, excellent fine tuned zone. And I think yesterday this zone got tested yesterday. Monday. It is tested and gave a very good profit on Monday. Actually, Monday I looked into this zone because Monday stocks near demand and supply zones. The Friday's report that we should use on Monday. We have a TCO zone. The TCO zone is a fresh zone. That means it is not yet tested the supply zone, the TCO demand zone. So if prices retraces back to the TCO zone, definitely we can take a TCO trade. So that's why I monitor this stock. And at the time, the Friday itself, Friday means this weekend, before Monday, I have analyzed this stock. On Monday we got this trade. Because our software did not identify the stock near the supply zone, so I didn't talk about this particular stock on Monday's analysis video. But otherwise it was tested on Monday, and the moment it went to this zone on Monday, then the TCO zone has become low priority zone. Until this is tested, our TCO demand zone was, for Tata Power TCO demand zone is there. Please look into our premium reports, you will understand. Till Monday, look into Sunday's report. Sunday's means, I think Saturday I published. Friday's report I published on Saturday, right? Look into that report, you will understand. Friday, the TCO zone was like a high priority, high liquidity zone, because on Friday's report, this zone is not tested. If prices turned back and would have entered into the TCO zone, we would have taken a high priority trade on that. TCO concepts you already learned, I explained clearly all the concepts. Some important TCO related trades also explained. Those trades you can identify in important strategies and analysis videos. I explained in HLQ zone analysis videos, but they are not HLQ trades, TCO trades. I explained in a couple of HLQ analysis videos. At hourly income trade, I explained. So this is the one, it has given a good profit it has given on Monday. But anyway, today price didn't enter. But this zone is also having a fine-tuned 5-minute zone. So this is the one here, it is a fresh zone. We have a drop base, drop and follow through candles, this 5-minute zone. And also this zone is also having an horizon. This entire daily zone is having an horizon here. So here drop base, drop and tested and sharply came down. And now this zone is again tested. This time this entire daily high liquidity zone is created by picking the orders from this zone. That means it is a very powerful zone. Next time when prices are entering into this 5-minute zone as an horizon, at the time you can plan the trades. But before that, a fine-tuned zone is also there. And aggressive trade setup is there, but it is tested already. You can't take a trade, this aggressive trade setup, unless it is a high liquidity zone. If this 5-minute zone is a high liquidity zone, you can take as many as possible tests. But how do we know this 5-minute zone is a high liquidity zone or not? Only our software can tell that. We have a supply demand zone chain. If you look into, generally I don't look into that, but sometimes I will look. But this time I didn't verify. How to verify? First of all, this zone is identified by our software. If it identifies, is it a high liquidity zone or not? Those things we need to check. Okay. One possibility, whether it is high liquidity, suppose any new zone is created, LOTL zone, that is one clue. But here no LOTL zone here. All these are all rejections from this zone. Okay. So this is about Tata Power. And next one is MFSL. MFSL is violated the zone. It doesn't have a fine-tuned zone, but we have a zone tested multiple times, 5-minute zone. Go to the 15 minutes time frame. 15-minute structure is not good. So generally this zone should violate. But why it is not violated? Why it is picking the orders from this zone? It picked up a little inside, again this time deep inside it went. That means there could be a 5-minute zone. That is, might be having a strong order flow or might be high liquidity zone. See here, we have a drop, base, rally. Tested first time, prices moved up. Tested second time, prices moved up. Tested third time, this time prices came deep inside, moved up. Maybe high liquidity zone. If it is a high liquidity zone, what is the, and we can take multiple trades. Let us assume you took this trade, you took this trade, and today maybe you will try by taking the trade, but today it is violated. If it is violated, okay, violated. Today it got the expiry date. What is the high liquidity zone strategy? Keep on taking the trades until it is violated. The day when it is violated, just ignore that stop loss, because it is only minimal. Compare it to the profits we enjoyed from this zone. See how much profits. Tested first time, see huge profit. Tested second time, again good profit. Tested third time, again much bigger profit. Every time this zone is tested, today it got the expiry period. Maybe institutions didn't add a new order flow. Maybe one of the reasons prices went deep. Maybe prices went deep, still institutions may add. We have seen some trades, prices went deep, almost about to touch the distal line. Next time again just touched the zone and again moved up. We have seen such kind of trades. So that is the reason why we can't tell that it went deep, you cannot take trade this time. There is no such kind of rule for high liquidity zones. Maybe if you consider that rule, if you ignore, maybe you might not have taken a trade, but sometimes you will miss an important trade in some other stock. So high liquidity zone. See, those who took trades earlier, they should not be having any fear in taking this trade. If it is a successful, you would have got a good profit. If it is a failed, small stop loss it will hit. Compare it to these profits, you won. So that's why you need to ignore this. That is what I told you. Any high liquidity zones, fresh zone, if it is violated, then we will register that zone as a stopped out trade. If it is a tested once and then stopped out, if it is tested twice and it is stopped out, or tested thrice, see here 3 times and then stopped out. In all these scenarios, the stopped out trade we don't consider at all, because it already gave enough profits from this zone. But those who missed earlier trades and took trade first time in this zone and now it is stopped out, definitely it is a painful to you. So that's why I am telling the people, the zone tested several times and first time when you are taking the trade in that zone, you should be careful. Such kind of things will happen. See, what is that? The Laris Labs, that is also tested 3 times. That one is also tested 3 times. And this one also tested 3 times. Laris Lab gave a successful trade and this one is stopped out. That's why we never know when it is going, a high liquidity zone will be having an expiry period. But one day it will be violated. But we never know. That is for the first test or second test or third test or fourth test or fifth test, you don't know. But one day it will be violated. Until then you will enjoy the profits. That's it. So this is about high liquidity zones. Always you should keep this point in mind. So today this zone is violated. But this is an aggressive trade setup because this is not having a fine-tuned 15-minute zone. Laris Labs is also aggressive trade setup. This is also. Okay, it got the expiry period today and violated. And next one is Tata Steel we discussed. This is a Tube India, TI India. This is a 75 minutes high liquidity zone. We didn't get the trade. It looks like last candle came near to the zone and sharply moved up. Maybe order flow is very strong. Anyway, this is a 75 minutes zone. This is the drop candle identified by our software. This is the leg-in. Software identified 1, 2, 3, 4, 5, 6 base candles and a rally candle. And this one I fine-tuned with 15 minutes time frame. In the 15 minutes time frame, I have identified this as a rally candle, 1, 2, 3, 4, 5 base candles, and then a rally candle with hidden body, a rally candle. And this 15 minutes fine-tuned zone, again fine-tuned with 5 minutes time frame. And this I considered it could be a high liquidity zone. First let me show you how it is. I consider this as a drop candle, 3 base candles and a rally candle. You can also consider a rally, 1, 2, 3, 4, 5 base candles and a rally candle. But why I have drawn up to these 2 candles, the reason is the movement started from this candle. So I consider this is the area the real order flow is there. See, that is the reason why, see here, it is tested first time, moved up. Again tested second time, moved up. Maybe this could be a high liquidity zone. See here, I am saying this could be. I am not saying this is a high liquidity. It is just a prediction. Previously, prices they were trying to reach, but order flow institutions might have added, moving up. See today, the last 10 minutes candles. Price came very close to this, and after that, see, sharply moved up, and closed. Drop base drop, this 5 minute zone is reached. Generally what we take last 1 hour, if you take a trade, your target will be 5 minute zones. So drop base drop came very close. If you add some buffer, maybe your trade would have been executed. But we won't take last 5 minutes, 10 minutes. Generally we don't take trades, that is quite risky. But I'm trying to tell you the power of the high liquidity zones. Okay, TI India and the last one is LODA. That is nothing but Macrotech developers. This is also a 75 minute zone but supply zone. How our software identified? Software identified this failed ERC candle as a leg-in. Maybe it is a rally candle. You have 1, 2, 3, 4 base candles and drop candle. This is how our software identified this zone. And this one fine-tuned with 15 minutes time frame. I have identified a 15 minute zone here, a fine-tuned zone. So rally, 3 base candles and a drop candle. That is one way you can consider. Or failed ERC candle as a rally, 2 base candles and a drop candle. Actually I have drawn like this. This is a rally candle, failed ERC candle. These 2 are the base candles and drop candle. This is the 15 minute zone. And this 15 minute zone again fine tuned with 5 minutes time frame. So here we have a 5 minute zone here. So how I identified? We have rally, 2 base candles and a drop candle. See, prices again tested, came down. While testing, rally base drop is created, LOTL zone. Maybe this could be a high liquidity zone, that's why LOTL zones are getting created. See, next time again tested. Again while testing, see, rally base drop is created. That means this could be LOTL zone. Again third time it is tested. And sharp rejection from this zone this time. So that's why, because it is a high liquidity zone, let us plan our next trade also until this zone is violated. We can plan our trades, but unfortunately today price did not enter into that zone and we didn't get any trade opportunity. Price entered into the zone but not up to the fine-tuned 5 minutes area. The fine-tuned 5 minute zone is a high liquidity zone. So this is about Macrotech developers, that is nothing but LODA, the script name. So this is the analysis of our HLQ zones identified in the previous report. Hope this information will be useful to you. Let's all meet again in our next video. Thank you.